This is a story of how the third largest crypto exchange and at one point the second largest crypto exchange went from disrupting the world to filing for Chapter 11 bankruptcy. FTX has been all over the news as of late, and not for the right reasons. And when it comes to crypto in general, the story can either be really cool about transforming the future, the way we transact, the underlying technology, it can all be very futuristic. Or it can be really, really bad. It can be about major scam, hoaxes, fraud, money laundering, and the story of FTX, unfortunately, fits this bucket. And if you don't know FTX, no, it's not another Korean boy band. I'm thinking of one, but can't exactly pinpoint who. The sudden and rapid downfall of FTX came after the company, facing a major liquidity crisis, agreed to sell itself to rival Binance for an undisclosed amount. Customers immediately became concerned about whether or not FTX had sufficient capital. But Binance, the world's largest crypto exchange firm, backed out of this non-binding deal after taking a look at the books of FTX, at which point it became crystal clear that FTX's problems were too big to solve. CEO Sam Bankman-Fried, also referred to as SBF, had warned investors last week that without an infusion of $8 billion in cash, the company would have no choice but to file for bankruptcy. Can I just say this? If you are putting your money into crypto, whether it's through an exchange, whether it's through a platform, whether it's the crypto coins themselves or an ETF, doesn't matter. If your money is going into the space, you cannot blindly trust internet talking heads or just celebrities who are endorsing these platforms. They get paid to hype up these platforms. They get paid to support and endorse these exchanges and these platforms. And no one will care more about your money than you will. So it's super important that you do your own research, you do your own due diligence on where your money is going, and more importantly, how your money is supposed to come back to you. So back to FTX. FTX is a cryptocurrency exchange, meaning it allows you to buy, sell, and store digital cryptocurrencies such as Bitcoin, such as Ethereum, as well as other digital assets such as NFTs. FTX is headquartered in the Bahamas and was founded in 2019 by SBF. Now, a point of clarification, as it could sound a bit confusing, SBF is the CEO, FTX is the exchange. As of 2019, FTX had more than 1 million users. And every time I hear of a company that's headquartered in the Bahamas or somewhere in that region or somewhere similar, honestly, I just don't get warm and fuzzy feelings that they're going to take care of my hard-earned dollars. Not because of where they're located, because typically when these companies pick a location like this, it's for all the wrong reasons. Either they're trying to escape regulation, hide themselves from regulators, especially in the US, or they're trying to tax shelter their dollars so they don't have to pay any taxes and support the local economies of where they transact. That's why I get weary of these places when they choose headquarters for the wrong reasons. Prior to this fallout, FTX and Binance process the majority of all crypto trades worldwide, which is huge because the crypto market altogether is worth close to $1 trillion. And to put this even into more perspective for those of you that remember, the fallout of FTX is getting compared to what happened with Lehman Brothers back in 2008, which sparked the financial crisis. And who is Bankman-Fried anyway? Is the guy leading FTX? Well, this dude, SBF, is a 30-year-old entrepreneur who over the course of the last 3 years built FTX into a $32 billion empire. And up until recently, he served as their CEO, which makes sense. If you are in the middle of alleged fraud, you shouldn't really be CEO anymore. And outside of heading the third largest crypto exchange in the world, he was also a very prominent figure in the US, especially on Capitol Hill, supporting many Democratic political campaigns. And to no surprise, he is a major advocate of the cryptocurrency industry itself. And now, after this implosion of FTX, the Biden administration is calling for greater oversight over the cryptocurrency industry. And what did SBF have to say for all this? Well, he sent out a tweet saying he messed up. But the damage had already been done. His net worth had all but evaporated. Up until recently, he was worth close to $15.6 billion according to the Bloomberg Billionaire Index, making him one of the richest 100 people in the world. Now his net worth is about zero. What FTX saw is no different than a bank run, when people are rushing to the banks to take their money out before it's all gone. That's a very scary situation. Imagine seeing your life savings disappear overnight. Initially, Binance and their CEO had agreed to step in and take over FTX, but they changed their mind once they figured out what was happening in their financials and started to learn that FTX had been mishandling customer funds. And this is what Binance had to say. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, they said in a tweet. But the issues are beyond our control or our ability to help. Filing for Chapter 11 bankruptcy will allow FTX to stay operating while it figures out a plan to pay off its creditors. This news had sent Bitcoin and Ethereum into a frenzy, both falling dramatically because of this fallout. So what can we learn from the fallout of FTX? If you take away anything from this video, let it be this: trust but verify. And if you're enjoying this video and you're finding it helpful to understand what went wrong with FTX, do me a quick favor, hit that like, subscribe, and thanks button on the bottom of this video. That way you don't miss out on future content. My goal is to help you understand the world of your money. To me, FTX is a great reminder of a cautionary tale. Transparency and industry standards are required to support proper market functioning. Unregulated centralized players pose the greatest risk to the digital asset industry. A multi-billion-dollar market cap and naming rights are not proxies for financial stability. What this really means is that you can't blindly trust a company just because it may be worth $30 billion, $50 billion, just because all the celebrities are hyping it up, they're talking about it, just because that company has its name on all the biggest arenas worldwide. Trust but verify. And where did all the funds go? The money that the clients had trusted to the exchange? Well, there are reports that FTX transferred client funds to trading house Alameda earlier this year, also headed by a friend, SBF. And according to these reports, at least $4 billion was transferred to his trading house without anyone knowing. That is super shady. What happened was that back in May and June, his trading firm was hit with a series of losses, including a $500 million loan from a crypto lender. He didn't want anyone to know that he was covering the losses of his trading firm Alameda with client deposits from FTX. Financial fraud continues to happen. On the outset, everything looks rosy, peachy, and good, but on the inside, that's where the real story is. Theranos, Bernie Madoff, they all look good because they promised outsized returns to investors. Theranos founder Elizabeth Holmes, she was guilty of defrauding investors out of hundreds of millions of dollars. In 2009, Bernie Madoff pleaded guilty to a Ponzi scheme that defrauded tens of thousands of investors as much as $65 billion. The loss of FTX, they're hitting everywhere. Venture capital firm Sequoia Capital wrote off its entire $200 million investment. The Ontario Teachers Pension Plan, they had invested $95 million into FTX. Also, that's gone. Mind you, the OTPP has net assets of $250 billion, so this is just a drop in a bucket. SoftBank, a Japanese powerhouse, Coinbase, they all had to write down their investment in FTX down to zero. As of right now, FTX will be investigated by the SEC and the Department of Justice. But broadly speaking, when it comes to trusting your money with financial institutions, you need to do a little bit of research. You need to do a little bit of digging. One way to do that, if they are a public company, is to take a look at their financial statements. I'm talking about the balance sheet, the profit and loss statement, the statement of cash flows. These three financial statements will give you insights as to how they handle their money. And can you trust their handling of that money? With some of these companies, you don't know where they're headquartered. You don't know who works for them. You don't know the type of internal controls they have to safeguard your assets. And this is a serious problem if there is no transparency, because you don't want your money to disappear overnight. FTX also has their own crypto token called FTT, and it's down 90% off of this breaking news. At one point, at its peak a year ago, FTT was trading around $80 a coin. Then it dropped to $22 a coin. Now it's worth less than a cup of coffee. Over the last 4 years, FTX had managed to raise $1.8 billion from venture capital and pension funds. This is the primary way financial markets could suffer. In its bankruptcy petition, FTX Trading claimed that they have $10 to $50 billion in assets, $10 to $50 billion in liabilities, and around 100,000 creditors. Just reading this statement, it makes me cringe as an accountant. There is a big difference between $10 billion and $50 billion. Not to mention, they're claiming that their assets and liabilities are in the same unknown range. It's crazy to think that at one point, SBF was being compared to Warren Buffett, one of the most well-known and respected investors of all time. The biggest red flag of FTX came within its balance sheet. Much of its value was based on the very token it had created. Essentially, they were valuing themselves on something they had invented and pumped up the price. BlockFi, another crypto firm with ties to FTX, stopped their own clients from making withdrawals last week because of this situation. In short, FTX was paraded as being the golden standard when it comes to crypto, with major celebrity endorsement, with major pension fund backing, all of it to come crashing down in an instant. It just goes to show you the lack of understanding and the lack of due diligence that these organizations have put into these companies before making significant investments. My 2 cents for you: if you see another crypto exchange or other crypto platform and they maintain their own valuation based on the very coin they happen to create, you might want to check twice before dropping your hard-earned dollars onto them. As a thanks for watching, I have some exclusive offers for you in the description of this video with amazing discounts and sign-up bonuses for products and services that I use on a daily basis. And while you're at it, make sure to hit that like, subscribe, and thanks button. That's it for now. I'll talk to you in the comments section.